Adding valuable metallics such as silver to your Gold IRA can be a wise investment method for diversifying your portfolio. Nonetheless, it's significant to understand the tax obligation implications of carrying out so before helping make any sort of selection. First, it's essential to keep in mind that not all precious steels are entitled for inclusion in a Gold IRA. Just certain types of bullion clubs and coins are enabled, as outlined through the IRS. For silver, this features American silver eagles, Canadian silver maple leafs, and Austrian silver philharmonics, among others. Once you've pinpointed which valuable steels you desire to include to your Gold IRA, you'll need to take into consideration the tax obligation implications. Here are some key points to keep in mind. Funds gains tax obligation. When you market your precious metallics at a profit, you are going to be topic to capital gains tax. The price will definitely depend on how long you kept the resource prior to selling it. If it was a lot less than a year, it will certainly be exhausted at your normal profit cost. If it was longer than a year, it will be tired at the long-term funds gains cost. Roth versus typical IRA. If you have a Roth IRA, any sort of gains coming from offering your precious metals will definitely be tax-free as long as you follow the rules for qualified circulation. With a typical IRA, nevertheless, withdrawals are topic to income tax no matter of whether they're from additions or earnings. Required minimum distributions. Once you arrive at age 72, or 70 and a half if you transformed that age just before January 1, 2020, you're required to start taking needed lowest circulations, RMDs, coming from your standard IRA. The quantity of these RMDs is located on the worth of your account at the end of each year, featuring any sort of priceless steels stored within it. This indicates that if the market value of your gold and silver holdings has increased significantly over opportunity, as lots of expect them to perform, then that increase could trigger a rise in the value of your RMDs, which would in turn boost your tax obligation expense. Storage expenses. If you pick to store physical valuable steels within your Gold IRA, you'll likely require to pay for storage expenses. These fees can vary relying on the custodian you opt for and the amount of metal you're keeping. It's additionally worth noting that there are prospective penalties for not complying with the rules surrounding Gold IRAs. For instance, if you withdraw funds from a Gold IRA just before age 59 and a half, or just before meeting specific other conditions, you may be topic to a charge of up to 10% of the drawback volume. In conclusion, adding silver or other precious steels to your Gold IRA can easily be an intelligent investment technique for diversifying your portfolio. Nonetheless, it's necessary to properly take into consideration the tax obligation effects before performing so. Produce sure you comprehend how financing gains income tax, Roth versus conventional IRAs, required minimal distributions, and storage expenses can impact your overall tax costs. As always, speaking with a monetary consultant or income tax professional is highly recommended prior to creating any sort of major assets decision. Incorporating priceless metals such as silver to your Gold IRA can be an intelligent financial investment strategy for branching out your profile.